Sales are the lifeblood of any organization. In fact, they represent key performance indicator. However, it is possible for you to make record sales and the business still collapse. Why? Because of sales fraud. In this video, we are going to deal with various ways sales can be stolen and measures you can institute to prevent this sales fraud. When we are talking about sales, we are talking about both credit and cash sales. And there's two major ways you can defraud a business of its sales. One is through skimming and larceny. Larceny is outright theft of sales that have been recorded in the financial record. The skimming is simply stealing of those sales that have not hit the financial record of an institution. There are several ways in which a business can be skimmed of its cash sales, and they include the following. One is poor itemization of sales. Maybe you go to your business and find that there is a sales of 200,000, but in this sales you cannot pinpoint exactly what sales were made or what items were made to arise to 200,000. Another one is offsite transaction. The best example I can give for offsite transaction skimming is, for example, to those people who sell insurance policies. They go outside the business premises and sell insurance policies. They register the client, but they do not report the client that they have registered to their business. What they do is the client pays the premium, the employees skim the premium. They never report to the insurance company. And this will only be realized if there is any complaint. Another perfect example of how offsite transaction can be skimmed is in the real estate. Maybe you have an apartment with maybe 5 units. The employee will come and report maybe there are 2 units that are vacant, yet these units are occupied. They will come these units that they are claiming to be vacant, and you only realize that they are occupied if you physically visit the apartment. Another perfect avenue of skimming sale is opening the business outside the official opening hours. Your employees will open your business outside the official opening hours, like maybe early in the morning. Maybe if you open your business at around 8, they will open at 7, make sales up to 8, and by the time you open your business, they have already made sales and they will not record those sales. Another one is extending the opening hours. Maybe if you are supposed to close your business at around maybe 5, they will extend the opening hours up to maybe 7. So in those 2 hours or in 1 hour that they have extended the opening hours, they'll be skimming your sales. Another way is opening maybe on holidays or on weekend. Another avenue of skimming sales is through understated sales. This can occur. One is recording fewer items sold. For example, let's say they sell 50 units. Instead of recording 50 units, they record 40 units and they skim the difference. Another one is fictitious discount. Maybe, for example, in a business, you have several categories of clients. Maybe, for argument's sake, let's say, for example, you have retailers and wholesalers. Wholesalers, their prices are slightly lower than the retailers. So what do? They record all sales as wholesale price, yet all the sales were made in retail price, and they skim the difference. And let us now switch the gear and go to credit sale. There are various ways in which credit sales can be skimmed. One of them is lapping, or what is in accounting is called teaming and running. What does it mean? Let's say you have 3 clients, A, B, and C. Your employee will skim your sales of client A, then use the funds from client B to clear the accounts of client A, then wait for C to pay and he clears the account of client B. The cycles continue until the amount is cleared. To investigate this kind of fraud, your accountant or someone who is dealing with these sales, they must have 2 sets of financial records so that they can be able to determine which account to credit and which account to debit. So when you are investigating, look for parallel accounts. Another obvious way of skimming credit sale is simply destroying the financial record or sales record. If there is no record, there is no client. That is direct and obvious. This is one of the clearest way of stealing credit sales. Another perfect way, or almost near perfect way, of skimming credit sales is through writing off the accounts. How does this happen? This credit sales as bad debts. So once that account is cleared as bad debts, they skim the sales but record them as bad debts. So it is like those accounts are no longer exist, and it is impossible to even claim those sales. Another way credit sales can be skimmed is through alternation of contact details of your customers. Let's say, for example, you send statements to your clients every end of the month, ask them to pay for the debts they owe. What they do, they alter the contact details such that even if you send statement, this statement goes maybe to addresses that they control, and therefore it is impossible for even your clients to know what they owe the business, and they cannot complain because they don't know, and maybe they assume that they have cleared the accounts. Another way of skimming sales is through short-term skimming. What do we mean? This is where your employees will skim your funds. Then when their financial records are being audited, they will deposit this cash so that your financial record will reconcile. And once the auditing and the reconciliation is done, then they again withdraw that cash. This cycle continues until maybe they completely destroy the record or they write off that debt. Another complex way of skimming sales is through fictitious expenses. How does this occur? Your employee will receive cash from your client as sales. They will clear the account of your client as being paid. They will debit cash account to show that the money has been received. Only that they will skim those funds and create fictitious expense matching the amount that the client paid, and that way all the account balance but the amount have been skimmed. The main challenges that skimmers face is inventory shrinkage. That is, the inventory in the system may be higher than the actual inventory in the storage. How do they overcome this challenge? One of the ways they overcome is storage of empty boxes. You find that there are so many boxes in your lot. You are thinking they are full of goods, yet they are empty. Another one is recording the inventory as obsolete good, or another way is recording them as spoiled good. That is one of the ways they try to solve the problem of inventory shrinkage. I have highlighted the several ways in which your credit sales and cash sales can be skimmed in an organization. Now, I'm going to show you on the various ways you can use to prevent this from occurring and make it harder for fraudsters to thrive in your organization. One of the way you can do is through installation of CCTV in high-risk areas. This will act as a deterrent because they know someone is watching. Another way of preventing skimming in your organization is segregation of duty. Ensure that no one individual is involved in the entire chain of a transaction, maybe sales and also deposit and recording of sales and also dispatch of goods. Ensure various individuals are involved in this chain. Another one related to segregation is job rotation. Ensure that no one individual stays in one role for a very long time. If that role can be done by any individual in an organization, ensure there is rotation so that if someone performs an error or there is an error in a certain department, it is easier to detect because the person who is coming in next will not know what the other person did unless there is a collision between all the employees. Another way you can prevent skimming is doing sales reconciliation every day and ensuring all the cash have been deposited in your bank account on the same day. Another one is ensuring there is no cash transactions in your organization so that all cash are either deposited through the bank, or if you operate through pay bills, you make sure that they are deposited in your pay bill account which is connected to your bank account. This way you prevent your employees from handling cash. Another way is making surprise cash count, and any differences must be clearly be explained. Another internal control that you can institute in your organization to prevent sales scheme is authorization. Ensure certain transactions are properly authorized. For example, not everyone has an authority to offer discount. No one has to declare goods as being obsolete. Not everyone has an authority to clear bad debts. This will ensure that those people handling cash sales, they do not use the various schemes to record sales as either bad debt or as fictitious discount. Ensure that all your receipts are pre-numbered. Okay, they are sequentially pre-numbered such that they follow each other in a certain sequence, so that if there is a gap between various receipts, that gap must be explained. For example, one receipt is 156, then another one is 158. The 157 receipt that is missing must be clearly explained on why it is missing, and that is one of the way you can be able to detect sales schemes. Another way you can prevent skimming of sales is hiring people of integrity. This can be done through screening of some of your employees before you employ them. Ensure that you are employing people who have a culture of integrity. And for example, you ensure that you do maybe a lifestyle audit of employees before you hire them. People with drug addictions and gambling problem are major red flags, and they are potential candidate for sales schemes. And even if you are to hire them, ensure that you don't employ them on high sensitive areas that deal with cash. I hope you have learned how sales are schemed and methods to prevent your sale from being schemed. The methods I've highlighted are not foolproof, but they make it harder for fraudsters to thrive in an organization, and they make your work as a manager easier in detecting these schemes, and it make it easier for you to audit, or for an auditor to audit your financial records. So I hope you have learned something, and you'll do everything in your power to ensure that your business does not collapse due to fraud. Until next time, goodbye.